I wanted to share a live recording to illustrate a couple of concepts using a trade on the Xilinx stock this morning. For those who've been trading for a while, this is likely ingrained in your heads. However, for those relatively new, I hope this will add some value in how to incorporate this into your trading strategy. The topic of discussion today is why price and volume are the only two parameters that matter. While we have our favorite indicators, and there are thousands of them, almost all of them are lagging in nature. The only real-time indicator available is volume, and that gives us a lot of clue as you parse the information available to you during the day. That doesn't mean the other indicators are important. They are, especially for filtering and scanning stocks. For me, for my day trading account, I start with a day trading list that is dynamic in nature. At a very high level, I'm looking for stocks that are trading above the Ichimoku cloud on the 30, 60, and the daily time frame. In addition, I filter for stocks whose MACD or the moving average convergence divergence is also positive on 30, 60, and daily time frame. Further, I filter stocks that have a volume of at least 600,000 so I can focus on the most liquid stocks. Now, I also look for stocks that have an average true range of 1.5. In other words, the difference between the high and low of the day is at least 1.5. So at least there's significant movement in these stocks so you can take advantage of it. Lastly, I look for stocks that are trading above the previous month high, previous week high, and yesterday's high. In other words, I look for time continuity on at least 3 to 4 different time frames, right? So as you can see, out of thousands of stocks, I'm typically left with about 30 stocks, and this, of course, varies from day to day. If the market's really, trending, you will see a bigger list. Now, once you have this list, I need to further identify which of them are trading at high relative volume. So, in other words, let's say if a stock typically trades a million, and by end of the day it has traded 1.5 million, we know it's traded 50% more than normal volume, and that's really useful information. However, I want to know this information earlier in the day. So I did some back of the envelope calculations. Now the market is open for 390 minutes, and I took that and broke it down into 15-minute chunks. So there are 26 15-minute bars, and I did a simple calculation of how much volume should trade each 15 minutes. So clearly I've divided it roughly evenly during the day. Again, I'm well aware volume because there's significantly more volume that is traded within the first hour of the day because of a multitude of reasons and news and people rushing into stocks for various reasons. It also slows down quite a bit during the lunch hour while again picking up in the last hour and a half. So I've written a code that tells me for each 15 minutes that if the volume is exceeding what normally it trades. And as you see, I've color coded to make it easier um, on which stocks are trading at much higher volume. So as you see that I started off with a list of 30 stocks, and now I'm left with 4 or 5 stocks where the volume is much higher than it typically trades at that time of the. So one of the trades that actually caught my eye this morning was a trade on Xilinx. So when I scanned my list, one of the things I saw was that early on in the morning, Xilinx had already traded over 100% of its normal volume. And where I've highlighted the blue arrow, that's where I initiated the trade, because you can see it's a little bit hard to see, but there's a magenta bar, and that's an inside bar, right? And once that inside bar was broken, I actually took that trade, and it was followed by this large sort of yellow bar, and these are something that I've color coded just to make it easier for me to see during the day. Now, for those of you who are not familiar with the 30-minute open range breakout, I have a separate video on my channel that you can watch it. But it will suffice to say for now that whatever range gets formed during the first 30 minutes of trading, a large set of stocks, say about 60 to 70% of the stocks, trade inside that range, right? And so I actually do not initiate a trade on a stock unless I see a break of the 30-minute orb. And that's something that you need to watch very, very carefully, because oftentimes institutions will make you believe it's breaking out of the 30-minute orb, and the very next bar they'll bring it back, and for the rest of the day it will just sort of chop around, right? But in case of Xilinx, since the volume was already high, um, it actually took out the 30-minute orb with the yellow bar, and which was that was further followed by another bar that exceeded the high of that. Now, right after that, you see a magenta bar that got formed, right? The magenta bar is yet another inside bar. Now, for those who are new to this concept, an inside bar gets formed when your current bar is completely engulfed by the previous bar, and this normally tells you it's a state of equilibrium, right, where the buyers and the sellers are actually balanced, and is also is a pause. Now, once that is actually taken out, the stock could move either way, but in this case, I waited and to see which way the stock moves, and moved up, right? And I was also following this concept called the single time framing, where where the low of the current bar is higher than the previous bar, and unless that gets broken, you actually stay in the trade. So as you see in this case, as soon as the red bar formed and it took out the low, that's where I took this trade off. So hopefully this helps, and you can use this into your trading strategy. Thank you.